of course, after all of these measures, we actually saw a little bit of a pop in Chinese equities, but that fizzled. The yuan still at around 9-month lows. What's going on?
It seems like the markets don't have a lot of confidence in the measures the government has taken so far. All these measures restrict the sales by some of the public funds and also the reducing the trading costs for stock transactions. These doesn't address the fundamental problem of the markets, which is we need something to boost the economic growth and boost the household and corporate confidence. So far we haven't seen too much of action from the government. That's why we see the rally fizzle quite quickly.
And this is kind of the old playbook, right? You know, ask these state funds to not sell, to go in and buy the state team. Is the problem now, because we're hearing from a lot of economists that are increasingly worried that this is a longer-term deflationary mindset that's setting in now? Yeah,
it seems to be the case. We look at the price action actually today. So when was the last time when the market rallied 5%, then essentially erased pretty much all the gains? There are only 3 previous occasions happened. Two happened in 2008. One happened in 2015. These occasions, we know that 2008 was the financial crisis. 2015, we had the bubble of the burst of the stock bubble in China. So let's tell you how much of the fragile the sentiments are in China. As we mentioned earlier, the fundamental problem is the weak economy and the housing market as well. It seems like for some reason, the Beijing is very reluctant to take some action under the constraints of high debt levels. So if they don't take more decisive measures, the risk is that deflation has become more entrenched in the economy.
It's a big week for Chinese earnings. We are expecting, what, $1.9 trillion of market cap reporting just on Wednesday. How much have these earnings results moved Chinese markets? And in fact, what's the next catalyst?
Yeah, exactly. So the earnings revision, if you look at it, have been trending lower as well. We see a number of the sell-side economists, sell-side strategists, including Morgan Stanley and Goldman Sachs, reduce their target level because earnings essentially is tied to the economic growth. If you don't, people start questioning if the 5% growth target is going to be in doubt, no doubt, then the earnings forecast will be cut as well. So, yeah, we need some catalyst to shift the market sentiment. So far, there seems to be a lack of action.